Hey everybody, it is Saturday, the 20th of July, 2019. The market's lost a little bit of ground this week. Nothing too bad. Semiconductors really stood out on the upside once again. But overall, we did lose some ground. So let's take a look and see where we are. And the S&P 500, we can see, is still clearly above its prior breakout point, also held above the rising 20-day moving average. But we did see we closed below the declining 5-day moving average. So it looked like the market tried to recover here on Friday, but it couldn't hold on to the gains. It has a declining 5-day moving average, and we generally don't trust those types of rallies, especially after it had moved from 296.75 all the way up to 300 and that round number. So we're backing off a little bit. That puts us a little bit on the defensive side going into next week because we are below the declining 5-day moving average. We can look at the volume weighted average price from the beginning of the month had been holding as support on a closing basis, but obviously we failed to hold that. I just want to put that on there for all the stocks because that's where I had it before. Anyways, the trend line that we could draw in here as well looks like this. So, maybe on Monday into Tuesday or so, we get a bounce. And then if we break below this level, then we would become a lot more defensive. But going into next week, again, we have to be defensive already because we have this declining 5-day moving average. We've had a good run, and a little bit of profit taking wouldn't be a horrible thing. I think that we're just on defense right now. The Nasdaq had made it to new all-time highs earlier in the week, and then has it just kind of holding right at that prior level. Now, again, we have to look at where has this market come from. We've had a really big move off of this low in here, and even testing that volume weighted average price is a possibility going forward. It wouldn't ruin the overall nature of this uptrend, but we have to be defensive because we're below that declining 5-day moving average. We saw on Friday the Nasdaq gapped up and could not hold those gains at all. So again, strong defensive mode going into next week. We're in earnings season. It will be dependent on the results of individual stocks. So just because the market might be having some trouble doesn't mean that every stock will. Keep that in mind and manage risk on its own merits for each stock. The Russell 2000, as we know, we've been waiting for this one to maybe try to break out and add some relative strength to the market, but instead we saw, of course, that it was unable to break out, which is why we wait. We anticipate all scenarios, but we wait for price confirmation before we actually take action, and it didn't get above that prior band of resistance. In fact, we came down to the band of support down here and are still having trouble with it. I was hoping that maybe this was a shakeout and then that we could kind of build on it like something like this, but obviously that did not happen. So there's no reason to be long the Russell 2000 yet, looking for it to break higher. And in fact, you could make the opposite case that it continues to underperform and perhaps we're going to have a larger failure. Now, one good thing is that the 50-day moving average, that's the green line, will start to flatten out. So perhaps we test that and find some support, but right now it's much too early to begin looking for a purchase with fresh money because we are below. Here's the week-to-date volume-weighted average price, the declining 5-day moving average, and the blue is, of course, the month-to-date volume-weighted average price. Semiconductors really stood out on the upside this week, so they had that big failure over here off that gap, but they've gained everything back and then some, and closing in also on all-time highs here in the semiconductors. So they're getting extended once again. The rest of the market is starting to falter a little. I would say definitely don't chase this market. You have to look at it and say, the low just a week and a half, 2 weeks ago, down here at 109 and change, it's had a nice rally, 8% or so. So now's not the time to be chasing this market. If you have gains in there, then know your level for your stop and know your time frame. Biotechs not able to hold on to that 50-day moving average, and this is clearly a weaker market group that is showing underperformance. It's stuck below not only the year-to-date volume-weighted average price, that's that thicker blue line, but also below the volume-weighted average price from the December low. And if we just kind of go like this and make that so we can see it a little bit more clearly, Let's see, that's where I wanted to put it. Anyways, you can see we're stuck below that as well, meaning that even from the lowest point on this chart, the average participant is losing money. That is not a good position to be in, of course. The sellers are in control year to date, since that December low, month to date, etc. So we're seeing that levels of support have been broken here at an important moving average as well, a 50-day moving average. And I think you have to look at this group as guilty till proven innocent next week. As long as it remains below 107, you should expect to see lower prices. It doesn't mean it'll drop immediately like this. Maybe it does something, more along the lines of that. But for now, going into next week, it is clearly guilty till proven innocent. The financials were, held on fairly well this week, but again, in here we have that declining 5-day moving average. We saw a slight undercut of the prior low and then a bounce, but it's it's more neutral than anything. I wouldn't put fresh money long or short here, and the primary trend on the daily time frame is still higher. So you have to, at this point, give the benefit of the doubt to the buyers. I think as long as we remain above 27.50, as long as we remain above that, the overall benefit of the doubt goes to buyers, but we don't want to commit fresh capital with a declining 5-day moving average.